In this video, I'm going to discuss the 5 steps how you can start investing. These are very simple steps to make it easy for you to see that it's not too hard. Here we go. This is your investing, not your trading. If possible, save 1500. You don't have to, but it's good to have 1500. But invest only $500 at a time. Don't be tempted to keep buying and increasing your exposure because it will just give you stress if you lose that money. That 2 sets of 500, you only use that if you lose your first 500 investment. So hopefully you won't. Number 2, select a sector. Example, exploration of gold and antimony. This is just an example. You can check other sectors if you want. Number 3, select the company. You select the company only after considering a few options. So you search on Google, for example, what are the companies exploring gold in antimony in Australia or in Canada if you're interested in Canada. But mostly here in Australia is where you'll find exploration company, and it's possible for you to invest in Australian companies exploring in Australia because many platforms now allow you to do that even if you live in Europe or North America or Asia. So you evaluate each of those companies that you selected and then choose the best one. Invest your $500 in the company that you think is the best among them. And number 5, open an investment or trading account. In regard to this, I suggest that choose one that has a really low fee. For example, Hello Stake. This is not a recommendation, but I'll tell you that Hello Stake is one of the lowest in Australia, $3 per transaction up to $30,000 per transaction. They only charge you $3. Now, I mentioned this, and the point that I'm going to mention, second point, very important, apart from the low fee, is the fact that you own your shares. They will give you HIN, which means that's the identification number which registers you with the ASIC, Australian Stocks and Exchange or in Investment Commission, that you own those shares that you buy under that platform. Therefore, if the broker or stake goes bankrupt, you keep your shares, you own your shares. I think that's a very important feature of a platform that you choose because some brokers have gone bankrupt in the past and they took the investment of people with them. That's not a very good outcome. You can check their website. I'm just saying this as of the time that I chose stake for my small investment. This is what I've read. You can review other platform providers if you wish to. This is just an example of one of the platforms. Let's say you now have invested your first $500. What's the next steps? The next steps would now be to monitor the company announcements. You would have identified that there are short-term catalysts on this company. For example, they are going to drill, so you look at their announcements, monitor them, how they are progressing. They might have mentioned that they will drill for 4 weeks, and then for another 4 to 6 weeks, they will be able to receive those assays. Apart from those announcements, you have to monitor the share price action, and the reason for that is that when the price doubles, sell your half of your investment. This is called going free carried, which means the amount that you left invested in the first company is like free money because you have taken your initial investment after selling half when it doubles. What is the rationale? Well, that is to preserve your capital. It is true that penny stocks go 5 times, 10 times, 20 times, even more. But at this point, it's more important for you to learn and to have money to learn rather than make a lot of money. So hopefully you need to touch the other $1,000 that you save at the beginning. So don't think, just do it. If it doubles, you sell one half initially as you keep learning. Of course, if you lose the money, then you may need to put in another 500 based on your best effort to identify the next one. And it's okay if you lose the first one. I think as long as you don't get depressed, it's okay to continue. You keep learning because this is different from investing 500 every month in index fund. You're going to put that 500 or 300 every month throughout your life, your working life until 60 or 65 years old, just to have 1 million. However, this one is like you are using small money but making an effort to learn how to invest so that you can grow small money and even manage your bigger assets later on. What else do you do? Continue to read about the company projects. The more you know about management and the project, the more that you increase your conviction. Alternatively, you might discover something that bothers you about the project or the company that may prompt you to decide to sell and then look at another better option for you. That conviction is very important for penny stock investors with little amount to invest because it will help you to keep holding when it's tough. For example, Pilbara Minerals. People who bought at 1 cent in 2014 had the joy of seeing their investment grow to $1. In other words, 100x. So if they invested 1,000, if to simplify the example, if they invested 1,000, it was worth 100,000 in 2018-2019. What happened in March 2020? It fell to 13 cents. So from 100,000, it fell to 13,000 at the start of the pandemic, but they held strong. That conviction was very important. When it recovered, the share price went to 580 in October 2022. Same as LTR, Liontown Resources. It dropped from 17 cents to 5 cents in March 2020. Then it rose to $3.20 in 2023. And a lot more stories like this, so you can appreciate as you learn the importance of having that conviction, knowing well the company you invest in, so that you can decide whether to keep holding or to sell. So here are the 5 steps again. I'll consider in the other video. I'll put a link here how to evaluate a company. There's a simple checklist that you can use. I'll share it to you in the other videos. Thanks for watching this video.